in which you may turn on your video and unmute yourselves. And lastly, please raise your hand before stating your question in the open forum. Please take note of these so we can have a smooth flowing seminar. With that settled, let me introduce our speaker for tonight. Our speaker for today is an investor and stock market analyst. He graduated from the Ateneo de Manila University's Distinguished Management Engineering program this year. He had been a research analyst intern at CTS Global Equity Group Incorporated during the summer of 2019. Currently, he is a global equity analyst at Cedarside Investments Limited, an active equities investor and an assistant hockey coach. I would like to introduce Mr. Benjamin Jorge S. Imperial, who will be sharing his expertise on stock trading in the time of the pandemic. Let's give him a round of virtual applause.
Okay, hi everyone, good evening. Thanks for that fantastic introduction, RJ. So yeah, today I'm gonna give a talk. Let me recap first. Yeah, my name is Benjamin Jorge Imperial. I'm a research analyst at Cedarside Investments, and I work under the chairman of Call Financial, Sir Edward Lee. So yeah, today my talk is entitled The ABCs of Stock Trading. So it's called the ABCs of stock trading because I hope to give you enough of the basics and the basic understanding to jumpstart your career or your path in the stock market, right? So the best way to start learning the ABCs is by skipping right to one of the last letters, and that is letter Y. So why are you here today? Why did you decide to join this stock? So what got you interested in joining the financial markets? Okay, so it's important to know your why because this will give you a purpose. So maybe you have a friend that made a lot of money recently in the stock market. So maybe you watched, I don't know, The Wolf of Wall Street or The Big Short or Billions recently, and you were like, hey, this looks like fun. I want to live the lives that they're living. Okay, so knowing your why gives you a purpose so that you can retain more information and you can learn better. Okay, so now that you know your why, and to get to where you want to go, we have to know where we are right now and where we have been. Okay, so let's take a look at the Philippine market right now. So this is the Philippine Stock Exchange Composite Index, or the PSEI. So the PSEI is basically a collection of the top 30 stocks in the Philippines. So if you can compare this to an all-star team of a sport. So these are like the biggest players, the best players that are meant to represent the quality of the entire Philippines at any given time. You can also compare it to maybe an artist. So if you want to know how big an artist is, you're gonna look at their all-time greatest hits. Okay, so for the Philippines, the PSEI, it's basically a cumulative way to look at the entire economy and the entire market as one. So why is it important to look at our index? So for foreign investors, so big investment groups in the States or maybe in Europe, if they want to invest in an emerging market just like the Philippines, they don't invest in individual companies. Instead, they invest in the index. So they invest in the index because they don't want to get too nitty-gritty with their investments. They don't want to dive deeper into small companies of emerging markets. So they're just going to buy the index. Okay, so let's put this chart of the PSEI into words. So this year started around the 8,000 level over here. And then right now, we are here at the 7,000 to 7,200 level. So I'm sure you guys have a brief or a vague idea of what happened in this period, okay? So this is how the year started. On January 30, the first COVID-19 case in the Philippines was recorded. Between January 30 and March 16, when our government announced Luzon under enhanced community quarantine, the PSEI index dropped 45.9%. So what's the relevance of it dropping 45.9%? It's a big number, but it gets worse because in a period where businesses are shutting down, when people are getting fired left and right, when people are losing their sources of income, if they had savings or investments in the stock market, this also dropped by 50%. So it can be a very, very tough time for people with investments and going through difficulties because of this pandemic. Okay. So how is it going now? So according to our chart, the previous slide here, from the bottoms of March 16, we are able to trace back to the 7,000 to 7,200 level. So what happened? Of course, businesses were able to adjust to the pandemic restrictions. And also there have been some positive developments on the COVID vaccines in the United States. So since that 45.9% drop, our index has rallied 77.51%. So what's the relevance of that? If you were able to invest when the stock market crashed all the way down in March, your money and your investment would have grown by 77.51%. Sounds like a good bargain to me. Okay. So let's dive into individual companies instead of our index. So let's think of a company very much affected by this pandemic. So think of a company that hasn't been able to offer their services, or a company that nobody has been using for the past 8 months. Okay, if you answered Cebu Pacific, you're right. Cebu Pacific, one of the biggest airlines in the Philippines. Of course, all of their flights were grounded because travel was very strict throughout this period. So from the start of the year to the bottom in March 16, Cebu Pacific dropped 44% in value. So is this justified? So ask yourself, did they have business? Were they able to earn? Did they have to keep paying their employees and for their facilities? They have. In Cebu Pacific's latest earnings report, it showed that for the year, they lost 14 billion pesos. So who would invest in a company that's losing that much money and has a very small chance of earning that money back in the near future? Okay. So now let's think about a company that has been doing well over the past 8 months. So think about a company whose service you've been using, whose service you are using right now. I mean, if you are using their service right now, then you might have an idea of what it is. So that is PLDT. So if you're a Converge user or something, yeah, you probably don't use PLDT service. Anyway, so PLDT, unlike Cebu Pacific, has been able to offer their services and actually sell during the time of the pandemic. So if you bought PLDT down here right after the market crash in March, you would be up about 71% today. Let's say you didn't buy it at the very bottom. Let's say you held PLDT from last year or the very start of the year, January. You would still be up 40.5%. Much better than the people who are holding Cebu Pacific in the start of the year. Okay. So after looking at these two companies, you kind of get the idea that as long as you know that the company's business model, as long as you know what they're selling and who they're selling to, and you know what is happening in the economy around you, you kind of have an unfair advantage. I wish it was as straightforward as that, but there's a lot of things that go on in the stock markets. Okay. So given these two companies, you can see that there's a huge opportunity for you to earn money, but also to lose money. So earning and losing are two sides of the same coin. So you might say that flipping a coin is just a 50-50 toss. I'd say your chances are much lower than 50-50. Nah, I'm just kidding. Hopefully. So today I'm going to prepare you to try to get your odds higher than 50-50. Okay? So before you flip that coin, there are a few steps that I want to teach you before you play. Okay? So that's like any other game, you have to start at the very beginning with picking your character. So who do you want to be throughout the rest of this journey? Next, you have to learn the language. The third step, of course, you have to prepare yourself before you play the game. And lastly, nobody plays a game to lose, right? So let's get right to it. So the first one, character selection. So your choices are a stock investor and a stock trader. So these two characters are very different, but both excellent choices. They both have their pros and cons. So let's look into a stock investor first. A stock investor usually looks at a longer time horizon. They could be holding a stock for months or even years. Usually, they expect lower rewards, but they're also exposed to lower risks. That is because their investments are more passive and they don't take advantage of the volatility of the market that much. However, statistically, stock investors are actually 100% profitable. So it's like flipping a coin and getting it right every single time. Sounds fantastic to me. The next choice is the stock trader. So stock traders usually trade in shorter time horizons. So they can hold the stock for weeks, for days, or even for minutes. So that means they can buy a stock right now. A few minutes later, they sell it for profit or for loss. You never know, okay? So unlike a stock investor, stock traders actually have higher potential rewards, but that means they are also exposed to higher risks, okay? And then another difference between a trader and an investor is stock traders are more active with their investments, meaning they watch the markets every day. Every time that the price moves up and moves down, they're aware of it, so that they know if they're supposed to sell, buy more, or sell again. So it's up to them because they're actively watching and they know what's going on. Okay, but the catch is 85% of stock traders lose their money. So 85 is not a very good number. That's definitely less than flipping a coin. Okay, so let's look into the activities of each of these characters. So first, the stock investor. So essentially, a stock investor would find a company that they believe in. They think that the company will continue to grow and they will regularly invest in it. Okay. This chart down here is the chart of SM investments over a 5-year period. Okay, I'm pretty sure everyone here knows of SM. It's either you've heard of it, you've been to an SM, you've shopped in one, or you've eaten in an SM. So SM is a really big company. So naturally, someone with a brief expectation of SM growing throughout the next couple of years would choose to invest his money, his or her money, in SM stock. Okay, so let's say you invest a fixed amount, 100,000 pesos, for example, every year. So 100,000 pesos, you invest in January, the first year, January of the next, and so on and so forth. Okay, so you just put in 100,000 pesos. You buy 100,000 pesos worth of their stock once a year, and then you decide to sell SM stock today because you need the money, for example. Okay, so over the 5-year period, your average price for SM would have been worth around 816 pesos. Remember, this is just a rough estimate. And the price today is around 1,080. So what does that mean? So over the 5-year period, your money would have grown by 32%. So if you invested a total of 500,000 pesos, you would have earned 160,000 pesos. So 160,000 pesos just for pressing a button 5 times. Buy, 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 buy. Buy, buy, buy. Yeah. And then pressing sell sometime today, you earn 160,000 pesos just by moving one finger. Fantastic, right? Okay, so let's go to the next character, the stock trader. So the stock trader is essentially the same. They find a company that they believe in, except this time, they don't just blindly invest. They find the right time to buy the stock and the right time to sell it. So earlier, we looked at the 5-year chart of SM. Now we're looking at the 1-year chart of SM. Okay, this is just 1 year. So in 1 year, the stock trader pressed the buy and sell button more times than the stock investor did. Okay, so the black circles show buy buys, the red circles show times when the stock trader would sell. Okay, so we have 7 unique trades. So over a year, the stock trader would have earned 27% on their investment. It's a big gain. If you put it into perspective, if you want to match the stock investor's returns of 160,000 pesos, if the stock trader started with 600,000 pesos at the start of the year, he or she would have earned 160,000 pesos by the end of the year. So a 5-year investment would be a 1-year gain for a stock trader if you had that much money. Let's say we want to even out the playing field. So let's give the stock trader 100,000 pesos as well. So that stock trader could also grow their investment by 160,000 pesos in less time than the stock investor because he or she would earn 160,000 in 4 years. Okay? So how are you supposed to decide if you want to be a stock investor or a stock trader? Is it just if you have a strong finger, you should be a stock trader? Or if you have a lazy finger, you should be a stock investor? Not really. There's certain criteria that should match with your personality if you want to be a stock trader or a stock investor. So here's the criteria. Ask yourself, are you a risk taker or are you risk averse? Do you love the thrill of risk or are you scared of it? Are you aggressive or are you passive? Okay. Do you want to be a market technician or do you want to be a financial analyst? Are you restless or are you patient? Can you just wait on an investment to give you returns or do you want your returns right now? Once you answer these questions, you can decide if you want to be a trader or if you want to be an investor. Okay, I think now is a good time for a short break while you ponder on whether you want to be a trader or an investor.
Thank you, Mr. Imperial. Before we proceed to the next topics, which are means of entry, basics of stock trading, tips on making a good trade, and tips on making a good trade, we will have a 5-minute break. Thank you. All right, and now we are back. Let's continue with our seminar. Let us welcome Mr. Benjamin Imperial once again.
Okay, I hope that was enough time for you to ponder on whether you want to be a stock investor or a stock trader. Okay, so now that you've chosen your character, the next thing that we have to do is to learn the language. So when you play a game, why do you learn the language? Of course, it's so that you can trash talk the other players, right? Maybe. Okay, anyway, so learning the language through stock trading makes it easier for you to understand the jargon that a lot of traders and a lot of analysts use. So it may seem like a lot of noise, but let's focus on the essential terms that you'll hear a lot if you start in the market. So first would be the bulls and bears. Okay, so why did they use bulls and bears instead of like cats and dogs or frogs and lizards or something? Okay, so bulls refer to the buyers. So generally, they would be optimistic about prices. They chose bulls because when bulls attack, they strike going up when they charge. On the other hand, bears, which generally refers to sellers who are pessimistic about prices, usually when they attack, they stand up and then they strike down. So the way that these animals strike represents the prices going up or the prices going down. Next, the ticker symbol. So instead of putting the entire company's name in the stock market, they use an abbreviation. So for example, Jollibee is JFC, Ayala Land is ALI, SM Prime Holdings is SMPH, and BDO is BDO. Okay, so the next term is the quote. So what is a stock's quote? A quote gives information on a stock's latest trading price. So that includes the price at which it opened for the day, the price at which it closed for the day, and the percent range of change between the open and the close. Okay. Last column, fundamentals and technicals. You're going to hear this a lot because fundamentals are referred to the study of a company's business model, its finances, and its valuation. Okay. So that's going into their balance sheets, their income statements, maybe news developments about the company. Okay. Next, technicals. So this is the study of a stock's price action and market psychology. So that's looking at the candlestick charts, the trends, the patterns. So it's when you time your entries and exits. Okay. Next, we have volatility. So the volatility refers to how fast a stock's price moves up or down. So these fluctuations in price are referred to as volatility. So a very volatile stock moves up and down really fast. Okay. Next, liquidity. Liquidity refers to the amount of shares being actively traded. So you could have a very famous, very popular company, very liquid, like, well, any of the top 30 in the PSEI index would be very liquid because a lot of people want to trade their stock. Okay. Next, value at risk or VAR. This refers to the total amount of money you are willing to lose in a single trade. So limiting your VAR allows you not to lose all of your money in one trade. Okay. This last column refers to execution. So instead of just saying buy and sell, traders and investors decided to give it fancy names. So entry refers to when you decide to buy a stock. Exit refers to when you decide to sell a stock. And the cut also refers to when you want to sell a stock, but specifically for a losing position. So let's say Jollibee, for example, at 190 pesos, you decide to enter. That means you buy Jollibee's stock for 190 pesos. Next, your exit. It could be 195 when you sell for a profit or 185 when you sell to limit your losses. So the exit is both the up and the down price, but the cut is the 185 when you decide to limit your losses. Okay? So now that you know how to talk the talk, let's see if we can teach you how to walk the walk. So first, you have to prepare yourself before you start playing. So what are the steps that you need to do to prepare yourself to participate in the markets? First, you have to get the right equipment. Next, of course, you have to know the rules. And lastly, you need to have a game plan. Okay. So what kind of equipment do you need? So the first one is a brokerage account. So there are a lot of brokerage accounts available to you in the Philippines. So for example, there's Call Financial. Another example would be BDO Nomura if you have a BDO account. Another one would be Call Financial. What else? There's AAA Securities. There's Call Financial. There's First Metro Securities. And of course, there's Call Financial. Did I mention that? Okay. So to open an account, you need a TIN number. But if you don't have a TIN number and you're a student, all you need would be a valid government ID and accomplished forms. After you fill those out and submit them, congratulations, you have a brokerage account. Next, you need to fund that account. So your starting capital is important. So if you decided to open a Call Financial account, the minimum balance and the minimum capital that you need to put in the beginning is 1,000 pesos. Good decision, right? But the maximum amount of money that you can put in, that's up to you. So it's according to your comfort level. But I don't recommend putting in everything that you've saved throughout your lifetime in one go. Think of it this way. If you're going to learn how to drive, would you start driving in a Lamborghini? I don't think so. Okay, so take it easy and put in the amount of money that you're willing to learn with. Okay, last, external resources. So for you to be able to trade, you need to have access to charting software so that you can see the candlestick charts of the company that you want to trade. And you need research sources like PSE Edge, where you can see the latest disclosures of a company, like their income statements, their quarterly financials, their balance sheets, and other developments of the company. Call Financial has both charting software and research sources. The next step, you need to know the rules. So you can't go into a game thinking you know how to play when you actually don't know what the rules are, okay? So here we have the FTSR framework. So this framework made by the Kalum Trading Institute is the blueprint for every single trade of professional stock traders. So if you use this framework as well, you can be just like a professional stock trader. So let's break down this framework. So first, we have a few terms that you're familiar with, fundamentals and technicals. So let's dig deeper into fundamentals. Earlier, I told you that the fundamentals refers to the valuation of the company. Oftentimes, if you look into the fundamentals of a company, you have to be able to answer what the 4 P's are. So that's people, product, potential, and predictability. So the people refers to the management, who's behind the company, who's calling the shots. The product refers to what the business is selling. What's their business model? Is it a product or a service? Next, potential. Is there room for growth? Is there a possibility that in the future they don't stop growing? And last, predictability. Is their business sustainable? Is it a mega trend or is it a fad? Will it be gone in the next 5 years or will it endure? So let's take Jollibee again for an example. I love Jollibee. Okay, so who are the people behind Jollibee? So that's Tony Tan and his group of managers. So are they responsible? Are they visionaries? Well, they were able to take a small restaurant and take it global, take it international. So I think they're very good. Okay, so check on the first P for Jollibee. Second, the product. What does Jollibee sell? Their great chicken joys, their yum burgers, their burger steaks, everything. You guys know what Jollibee sells. But do they only sell food? Now that they've gone international, maybe they sell something more than food. Maybe Jollibee has ingrained itself so deep into the Filipino culture that they're actually selling Pinoy pride. Not just the chicken joy, but Pinoy pride. Think about that. Okay? Potential, possibility for growth. Do you think Jollibee can go even bigger? Can they set up more locations in different countries? I think they can. So another check for Jollibee. And lastly, predictability. Is it sustainable? Do they have a sustainable business model? For that question, I want you guys to think of this. Can you envision a future without the chicken joy? I, for one, cannot envision not having a chicken joy every now and then. Okay, so that's a fourth check for Jollibee. Okay, so next we look at the technicals. So here we have to go into the candlestick chart of Jollibee. So now that we know that Jollibee is a good company, we have to ask the question, is it the right time to buy the stock now? So lately, Jolly's been one of the companies who's been running up because of the potential of reopening. Okay, so once you identify the trends and patterns, you'll have to learn how to time your entries, which is when you're gonna buy, and your exits, which is when you're going to sell. Okay. Next is sentiment and risk. This we haven't touched on yet. So sentiment refers to understanding the market psychology. So why is it important to understand the market psychology? Let's say you're in a crowd of people, and then there's somebody in front asking, yes or no? When the entire crowd shouts no, and you shout yes, who do you think is going to be followed? Probably the no, okay? So there's a saying, do not fight the tide, and you can't fight the tide, but you can learn to surf. So understanding the market sentiment allows you to time your entries and exits along with the market sentiment so that you can get a better investment or a better return for your investment, okay? So people also say that markets can stay irrational longer than you can stay liquid. So let's say everyone on earth says 2 plus 2 equals 3, but you are smart, but you say, no, 2 plus 2 is not 3, 2 plus 2 is 4. But then everyone's like, no, 2 plus 2 is 3. So they're not going to follow you. And as long as they believe in it, you're going to be wrong, okay? And last, you have risk. So risk is managing both the upside and the downside of your investment. So when things go your way and you decide to sell, you should be able to measure that. And when things don't go your way and you decide to sell, you should be able to limit your risk, okay? So now that you know the rules, the next step is to have a game plan. So there are 4 steps to the third step. So there are 4 steps to having a game plan. The first one is to formulate. Second, execute. Third, review. And fourth, refine. So in the first step, when you formulate, you should be planning when your entry, exit, and what your VAR is. Okay, so it's important, right, that even before the market opens, you already plan out that if the stock moves this way, I'm going to enter at this price. After I enter the stock, if it goes up or if it goes down, I have prices at which I want to exit. Okay, knowing your VAR is very important before you do anything because the VAR will be how you calculate how many shares you are going to buy. Okay, so what's the use of planning if you're not going to execute? So step 2 is when you're going to execute your plan. So some tips to your execution. You have to keep it mechanical. Why do you have to keep it mechanical? Because the less emotions are involved when you're trading, the better the outcome is going to be. Okay? So when you keep it mechanical also, you become more consistent with the plan. And you can rinse and repeat your plan over and over again if it works. Okay? This gives you consistency. And over a long period of investing, consistency is what's going to give you the biggest gains. Step 3, review. After you execute your plan, you don't just forget about it. You look back and you say, did I follow my plan to the dot? Did I do everything that I wanted to do? What could you have done differently? Should I have sold earlier? Should I have sold later? Should I have bought earlier? Should I have bought later? Okay, so many questions, so many things that you can look at. That brings us to step 4, refine. So what do I mean by refine? So why review if you're not going to make changes? It's going to be weird if you review and you're just like, ooh, that was wrong. Let's do it again. Okay, so refine is when you make improvements and when you polish your strategy. Okay, so once you refine, you go back to step 1 and you do it all again. Okay, so this is an endless cycle. Notice how there's no step of if you're successful, you stop and you just formulate, execute, review, formulate, execute, review. No, there's always going to be the refine step because you're never going to stop learning. Okay, markets are always going to be changing. Things are always going to be keeping you on your toes. Okay, so you have to stick to the plan. Okay, so now that you have a game plan, now that you're prepared, you know the rules, you have the right equipment, you know how to trash talk the other players, the last thing left for you to do is to press play and play the game. And from now on, all you have to do is try your best to win. I mean, I hope winning was your goal after getting into the stock market. So how do you win? So you might ask me, give me a strategy when I know when to buy and when to sell to guarantee winning. Sad to say, I don't know that. If you know anyone that has a strategy that guarantees winning, please do let them contact us. I'm sure that they have an opening for them here. Do I think that you guys are going to win? If you follow the rules and you follow the framework that I just explained to you guys, I think you have a good chance of winning. Will I put my money on you winning? Maybe not. There's a lot of unknowns here. Would I put money on myself winning? I would. And that's because I know how much work I put into things, how much thought goes into my trading, and what I do to make myself better. So if you want to know if you're going to win, ask yourself this question. Would you put money on yourself? Okay? That's all I have. Thank you.
Thank you, Mr. Benjamin, for that wonderful talk. Now we are opening the floor for your questions. Please unmute yourself if you have questions for our speaker. You may also turn on your video if you wish.
Don't be shy. Yes, Almira, what's your question?
Hi, sir. Good evening. I would just like to ask if what if you're not a swing trader and and you're just a buy and hold type of trader, when would you suggest to, or what percentage of profit would you suggest for the buyer or the trader to start selling his stocks?
Okay, that's a good question. That's actually very specific. So that means you actually have been trading or you have a deeper knowledge about trading. So that's good. So when is a good time to sell? So like I said, you don't really know when a stock cannot go any further, right? So usually when we trade, like I said, you plan when you're going to sell if it goes up and if it goes down. So what's your basis for this? So for example, a stock, if a stock goes down by 5%, that's where I calculate my value at risk. So a good target for when you should start selling, or maybe even sell half or 1/4, is 5% up. So your risk to reward should be equal. But then the most ideal is when your risk to reward is at least 2:1. So if it goes down 5%, you decide to cut your losses. If it goes up twice that, 10%, you start to sell. Okay, so that's a good basis for knowing when you should start selling.
Thank you, sir.
No problem.
Thank you, Almira, for your question. Do we have any more questions? Going once, going twice.
Well, if you guys are shy, Call Financial's YouTube page and website has fantastic tutorials also. If you want to learn some more, you can head over there and just listen to them.
Okay, if we don't have any more questions, thank you, Mr. Benjamin Imperial, for that talk. And if you have any question, you may contact COL Financial. All right. Okay, as our seminar comes to a close, on behalf of UP OBEM, I would like to express our sincerest gratitude to our speaker, Mr. Benjamin Imperial. So as a token of gratitude, we would like to present this virtual certificate of appreciation for sharing your expertise po. Let me read the content of the certificate. The UP Organization of Business Economics Majors awards this Certificate of Appreciation to Mr. Benjamin Imperial for sharing his insights as the guest speaker in Peaks After Trough, Stock Trading in Times of Pandemic, given this 27th day of November 2020 at the School of Economics in the University of the Philippines, Diliman. Signed by Donald Tristan L. Lacson, UP OBEM's Vice President for Academic Affairs, and Rio Gabriel S. Ocampo, UP OBEM's President. Can we take a picture with you lang po?
Yeah, sure.
Thank you po.
No problem.
All right. We would also like to thank you, our dear attendees, for your time. We hope that this seminar has given you the knowledge you need in engaging in the equity market. And that's it. That concludes our program for today. Despite the current circumstances, this knowledge indeed will go a long way. The link for the post evaluations will be flashed on the screen. Please don't forget to fill out the form before leaving. Thank you very much.